There's an overwhelming amount of financial advice in the news and on social media. Who do you listen to? Are they looking out for what's best for you? How do you tune out the noise? In this podcast, trusted advisors Emily Agosto, CPA, and Amanda Vaught, JD, bring their extensive education and experience to delve into all aspects of personal finance. Emily and Amanda make topics like investing, taxes, and financial planning interesting and accessible. And they provide a framework to help you think through the plethora of financial advice and news out there. Are you ready to start making the best personal financial decisions for you? Welcome to Connecting the Dollars with Propel Financial Advisors.
Welcome to another episode of Connecting the Dollars. It's Valentine's Day this week, so everyone's thinking about, gifts and relationships and dating and whatnot. And today we're going to dig into how choosing investments in the stock market is a lot like choosing or evaluating a partner in the dating world. So, Amanda, why don't you get into that a little bit more?
And by partner, we mean long-term partner, right?
Yes.
We know different people have different goals in that department, but this is, I think in general, we're talking about investing. We're not talking about short-term trading or speculation or other types of things you can do with the stock market. This is, we consider stocks a long-term asset. And so we want to get to a long-term relationship with them. And before we get into that long-term relationship, we need to dig into them a little bit and see what's going on and see if they are the right fit for your investment portfolio, right? And then what could be right for one person might not be right for another person, just like in dating, right? So today we're going to focus on the stock market. And in honor of Valentine's Day, use Hershey's as an example.
Yes. The Hershey Company, I believe, is the
Hershey,
full
yes, I think the
the
Hershey
full
Company
name.
is the official name, yes.
Yeah. So, as you were saying earlier before when we were talking about this, that there's a lot of popular, articles and stuff out there about speculation and short-term investing. So we wanted to focus especially on a buy and hold kind of strategy, because that's what we typically do as advisors, and just how we work with clients, basically.
Right. And then, as the great investor Warren Buffett said, our favorite holding period is forever.
Exactly.
Yes.
Yep.
That should be the goal when you're picking out a stock.
Yeah. So if you were to give someone some advice about how to start evaluating a stock on their own, someone who's maybe not a financial professional, where would you steer them first?
Well, I think the first thing is to come up with a stock idea, right?
Sure.
That you have. Okay, so we sort of cut that process and just said Hershey's as an example of something to look through. So there's different ways you can find stocks to invest in. If it's something you're seeing on the news a lot, doesn't necessarily mean it's going to be a good company or a good investment. It could be, or it could not be, right? But sometimes there's just some boring companies out there that you maybe never have heard of who could be a great investment. So just reading, exploring with an eye to a potential investment is a good place to start. And this is, not something we need to rush into. So we can just take our time and see what's out there. If you read the Wall Street Journal or other major publications that have a financial focus that could introduce you to a number of different companies, that could work. But so if we go with Hershey's, one place, just a regular person, as a financial advisors, this is a little hard because we pay for subscription services and different research platforms. So as we were preparing this podcast, we tried to stick to the free sources that were out there. So one good free resource is Google Finance. I think Yahoo Finance is also great too. They give you similar information, so it's your preference. But here we are just looking at Google Finance as a place to start.
Mhm.
That will give you just an overview of the company, the stock ticker. You can start with looking at its market cap. So the Hershey company has a market cap of more than 39 billion. So that number tells you that this is a large company um, with significant financial activity.
Yes, for sure. I kind of also like in on Google Finance and other resources too, we'll pull in a lot of the articles written on the internet everywhere that
Yeah.
kind of give like a little insight into like, oh, why did the stock dip at this time? Or, just little things that you might want to research a little more. I don't know. I think that's helpful sometimes because it puts it into not only into numbers, it puts it into like, oh, this is how a business is operating. Like they bought a company, they acquired something. It kind of just gives you some more context.
Yeah, yeah. And I think for a lot of people who don't have a lot of experience looking at these numbers, it can just be like, look like a lot of numbers, and you're
Yeah.
just like, what does this even mean? So, we all have to start somewhere, right? And just saying, okay, I'll just look at that one number. I'll just look at that one number. And then as you research and look at, say, other companies, you can see how those numbers compare
Mhm.
um, as you get more familiar with what the numbers mean in context.
Yeah, exactly.
So
Okay.
what would you look at next, Emily?
Well, yeah, once you are a little more familiar, one thing I wanted to mention, which is a little annoying to me, like if you go to Google Finance and type in any stock, it shows you the 1 day like up and down of the share price. So
Hmm.
maybe switch that to like 5 years automatically, and you can see
Hmm.
that they're still in the green. Stocks go up and down. So don't just look at the 1 day and be like, oh, this is a bad stock. But I mean, people know that. So to go a little further, um, any public company that is on the stock market, you can find their actual like financial reports either um, on their website. Usually,
Hmm.
there's a section called like investor resources or investor relations, and the annual.
So, yeah. Oh.
Go ahead.
Oh, I was just gonna say if we're looking at Hershey's, I just went to Hershey's.com and you could see it right there in the corner. It says investors, and you click on that, and then you can see a bunch of their financial information for investors.
Yeah. So annual reports take a really long time to come out, like the official audited annual reports. So like right now it's February of 2024 and you can still only see their 2022 year-end reports. And those are really good to look at for historical information, but they usually also have some like quarterly numbers that are more current that you can compare. And
Hmm.
let's see, the one that we were talking
They
about.
do have the 2023 numbers up, but they're just unaudited.
Right,
And
exactly.
Emily is a good CPA, so she knows that those numbers aren't official yet. So
Yeah, but they're,
you
something
can
to,
give you a good idea.
yeah. And if I want to dig further into some account statement evaluation, but first I want to say this is just kind of an introductory look. We're not endorsing this stock by any means. We're just scratching the surface of some of the types of numbers you can look at and yeah, ways to evaluate the stock. So if you pull up, let's see. Well, maybe not. I won't go into specific things because we are on a podcast. But the
Yeah.
two main for or reports you will look for is the income statement and the balance sheet. And the income statement will give you an idea of how much revenue they brought in, how much they spent on various like on products, on overhead, like keeping their lights on, paying their people, etc. And so you can get a good idea, like, is this company making money or not? But it's really more about comparing either quarters or comparing years to see if the company's been consistent. I
Yeah,
think
we want to look at a trend, right?
yeah, I think that's a little more easier than like what the actual number is. Like if their expenses shot up one year and their income like hit the floor, you're going to want to dig a little further into what was going on. And you can find articles like maybe, I don't know, maybe you couldn't find chocolate for, you couldn't find cocoa for a year or something was going on with that. So in that regard, it's like not something the company did. It was a, an outside factor.
Mhm.
Um,
I think in 2020, we saw a lot of disruptions and that type of thing for
Absolutely.
a lot of companies. So,
Mhm.
you know, there's
Yeah,
right.
there's
Go ahead.
a lot of things that could go wrong for a company.
Mhm.
That it has nothing to do with how they run their business.
Right.
The second report is the balance sheet, and this is an important this is an important report, but it's also can be difficult to understand. Like everyone learns the income statement first in accounting classes, and we're like, okay, that makes sense. But then you get to the balance sheet, it's like, what's going on here? The balance sheet is divided up into three sections. It's assets, liabilities, and then the shareholder equity section. Um, Assets are obviously the cash they have on hand, their investments, inventory, anything that the company is owed. Um, and the liabilities represent any of their borrowing. So if they have taken on long-term debt to be able to expand their operations or something like that, you would see that represented in the liability section. And
Mhm.
usually we like to see companies that have a strong balance sheet. When you hear that word thrown around in articles or on any programs you're watching, that means that their assets are typically higher than their liabilities, so making them
Yeah.
more of a solvent company.
Yeah.
Um,
So I think
yeah,
just in basics, it's just the assets minus the liabilities. You want that to be a positive number. That means they
right,
have more money coming in than going out,
right,
right?
exactly.
And then you would say if it was a negative number, we would say they're operating at a loss.
Hmm.
I think one example of that could be in the tech bubble in the late 90s. A lot of those internet companies had no revenues coming in, but the stock prices were going up and up. And so if you're a long-term investor and you did this exercise and you went and looked at their balance sheet, you said, wait, oh, their assets aren't that big. Oh, and their
Hmm.
stock prices is this. And then you could say, oh, this might not be I mean, it's easy to say in hindsight, right? But
Sure.
this might not be a good long-term investment because the company doesn't seem especially healthy.
Hmm. Yeah, they would be more likely to go bankrupt, I suppose, than a company with a stronger assets over liability ratio.
Yeah. And then I just want to point out my favorite asset because I was used to be a patent attorney, but that's listed as goodwill,
Oh,
um,
yes.
the intellectual property side of a company. So that would be the patents and the trademarks. Um, that number can be hard to pin down. There are a lot of rules and stuff that people use to come up with a number, but if that number is especially huge, that's just something to consider. Like a
Yeah.
lot of their assets are based on their reputation, or say it's a patent, and the patent's expiring soon. It's just numbers you can dig into a little more.
Hmm. Yeah, if you actually download the annual report, it's like 200 something pages, and you don't even see the financial reports until like page 150. So
Yeah.
before that, they're explaining like how their year was, why this number looks this way. I mean, if you really wanted to read the whole thing, you absolutely could. I don't think I've ever read a full financial report, but what I usually do is I skip to the income statement and the balance sheet, and then I'm like, okay, why is this there? And then you scroll, you search the rest of the report, and you can find usually an explanation of why, or their explanation of why those numbers look a little different.
Mhm.
Um, I was going to say one other thing about the balance
I
sheet.
think we are going to talk
Remember.
about the long-term debt as a number to
Hmm.
look at on the liabilities part.
Yeah.
because the liabilities, like Emily mentioned, there's different types of liabilities. And one of the key ones, especially now in a high interest rate environment, is the long-term debt. Because that if that debt comes due and the company needs to refinance in a high interest rate environment, that can have a negative impact on their balance sheet.
Right. So in this particular example, well, in every balance sheet, you'll see like the short-term debt separated from the long-term debt. And from, was it 2023 to 24 or from 22 to 23? One of the most recent reports that Hershey had on their website, their long-term debt decreased significantly. And so that is a good sign that, they're not defaulting on anything. They are keeping up with their payments and they're not borrowing extra to be able to maintain their business.
One place you can see that historical long-term debt numbers was on the Wall Street Journal, which we were trying to stick to free sources of information. But if you are considering a long-term investment in a stock, paying for the Wall Street Journal subscription so you can do some more research on a company could be a worthy investment, so that you can get some more information like this and dig into some company financials even more. But then I think that talking about the long-term debt leads us, I mean, we're focused on the stock, but companies, if they do need to take on more debt, they can issue bonds. And so a large company like Hershey's could issue a bond in the bond market. If we're talking about a smaller company, they might have to go to a bank, or maybe venture capital to try to raise cash, and that can either dilute their stock or have like maybe a higher interest rate on a loan from a bank. But a large company like Hershey's can issue a bond and perhaps get a better interest rate than they could from a bank. So going to Moody's or S&P or some of the other rating agencies can be a good source of information as well. So I just searched on Moody's. You do need a subscription to read the full details, but you can see the headline that they recently rated them A1, which means it's a quality investment grade company. You want to avoid anything less than triple B would be considered non-investment grade or junk.
Right.
That's how it's referred to. So just other sources of information like that. I think mentioning the Wall Street Journal, they also have analyst reports. Yeah. So, there are people out there who are going to know a lot more about this company and a lot more about the stock market than you do. It's important to stay humble and remember that you don't know everything. And so we can look at some of these analyst reports. And so the Wall Street Journal has a summary. They say that X many people say buy the stock, this many people say hold, this many people say sell. And just sort of see, where the company falls along those lines too.
Yeah. Another thing you can try to look for, there's not like a specific place, I don't think, maybe Reuters or some Reuters, I don't know how to say that. A place like that might have some like industry comparisons. So
there you go. Yeah.
If you're looking at Hershey and you're like, oh, this number seems weirdly high, but maybe in the food industry, that number is always high, compared to like, you don't want to compare like a car stock to a food stock normally. And I think that can be interesting as well.
Right. Yeah, that's a good point. And then I think there's also, we've talked a lot about quantitative or numbers, but there's also some qualitative considerations that are valid also, don't you think, Emily? So,
yes, definitely.
Yeah, all of the numbers we're looking at are numbers that have already happened or the past. And so the stock market, we're looking forward, right? And nobody at the end of the day knows what the future is going to hold. Even the best analysts out there, we just don't know. So just how do you feel about the company? Do you like it? Do you like what they do? Do you have a great experience with Hershey's as a kid, and that makes you like the company more. I think those things maybe shouldn't be determinative, but if it's going to help you hold the stock for a longer time and not get spooked if, say, there is a blight on cocoa beans and the crop dies one
Yeah.
year, and all these chocolate companies have a tough time. If you feel like you can ride out that storm because you really like the company, that could be that is a market in its favor.
Yeah, absolutely. I know we've been talking about this and we've been hearing that instead of, focusing on a particular box of the stock market, like value or growth, a lot of analysts are saying to focus on quality companies. So obviously, quantitative analysis is a big part of that, but it's also like, yes, are they a trusted brand, et cetera? Not just your personal feelings, but a little bit, and everyone else's kind of, I don't know, just your general experience, I suppose, that you can
Yeah.
evaluate.
Okay. Well, I think there is a lot more to it. People get degrees in financial analysis. This is just sort of scratching the surface of some of the numbers you can look at, but I think this is a pretty good start. Don't you think, Emily? So,
Yeah, it's kind of
um,
fun. I mean, for me, I
yeah.
guess, as an accounting major and, a current CPA, I find it very interesting. But yeah, if you're a
Mhm.
numbers person or you just like reading articles about the companies you are invested in already, these are also good places you can go for more information.
Yeah. And I think it's also helpful if you have a friend that is also interested in this, you can get together and talk about it. I think women tend to do that less than men do,
Hmm.
like go golfing with my buddies and talk about stocks. Like women don't really do that, but I hope, more and more are starting to, and you can start your own little investing club, and it's a
Or,
way to learn about it. So,
or change your date night, to looking at your portfolio
oh
at
yeah,
night.
there you go. Yeah.
There's so many studies about like finance and relationships. So you can find articles about that and how it is like one of the
Yeah,
biggest issues people have in a partnership. So,
there you go.
you
And
know,
here I'll show. Here's one of the books and there's a lot of books out there you can read about investing. Here's one of mine, Stocks for the Long Run. So
nice.
this has a nice by Jeremy Siegel. I think my Zoom background is zooming in and out. I'm sure holding it up for those in the podcast. Um, but it there's a lot of information in there about how to evaluate stocks and specifically for long-term investing. And stocks are a long-term asset, like we said earlier. So
Yep. Well, I think that's all we got for this Valentine's Day episode. I hope you all have a nice week and let us know if you are, finding some fun information about a stock that you didn't know about or, just anything interesting. We would love to hear from you.
yes, for sure.
All right. So we'll talk to you soon.
Okay,
Bye.
bye.
That will do it for this episode of Connecting the Dollars. Nothing discussed in this episode should be considered legal, financial, or tax advice. If you like what you heard, please subscribe for more at Apple Podcasts or wherever you get your content. When you do, please give us a rating and a review. To see the links we mentioned in our show, along with other great Propel Financial Advisors content, go to connectingthedollars.com. You can find our past episodes there and subscribe to our newsletter. And if you're still here because you have a general question, you can email us directly at info@connectingthedollars.com. Or, if you're interested in working with us, click the Schedule a Consultation button on our website. Thank you for listening.